Right, welcome to the YouTube channel. Puta, this particular video is for the 2022 batch. Under the prime entry books discussion, we have given some additional question for you to do, and this video elaborate the answers for that particular additional questions what we have given in the previous week from the prime entry books. These are very short and basic questions to enhance your knowledge. I hope, I think majority of you all have done the question and send it to me the answers. Let me elaborate the answers. Right. Okay. What is the first question? If you haven't done this particular paper before, right, don't watch this video. Please do the questions. Complete the paper, and once you complete the paper, then you can go through with what? With the answers which I elaborate here. Right. Okay. What's the first one, Puta? All the purchases are recorded in the purchases journal. Right. They want you to say true or false. What do they say? All the purchases are recorded in the purchases journal. Do we record all the purchases in the purchases journal? No. In the purchases journal, you are recording only what, Puta? Credit purchases. In the purchases journal, you are purchasing the credit purchases. Right. Therefore, this particular answer is false. All the purchases. When you say all the purchases, purchases are two types. Purchases are two types. Cash purchases as well as the credit purchases. With the cash purchases, as we know, that will be recorded in the payment journal. Credit purchases only you record in the purchases journal. Therefore, the given statement is false. If you need, you can write only the credit purchases. Only the credit purchases will be recorded in the purchases journal. Only the credit purchases will be recorded in the purchases journal. Therefore, for the answer number 1, you can say it is false. Next, trade discounts are not recorded in the books of accounts. Yes, so that you know that discounts are two types. Discounts are two types. One is trade discounts, the other one is a cash discounts. But these trade discounts we never ever record in the books of accounts, but what you will record only the cash discounts. These cash discounts are mainly, when you record, you can divide into two: discount allowed and the discount received. This discount allowed you recognize as an expense, this discount received you recognize as an income. Therefore, yes, the given statement is true. Given statement is true. Trade discounts are not recorded in the books of accounts. Next one. List price is a price before deducting the trade discounts. List price is a price before deducting the trade discounts. Yes or no? Yes. Puta, from the list price, you can see this properly. Once you subtract the trade discounts, what you will get? Invoice price. This is a relationship. For this only, if the VAT portions are available, that will be recorded, then you get the final total value. Right. So anyhow, you can see price before deducting the trade discount you call as a list price. Price after deducting the trade discounts you call as invoice price. Therefore, the third statement is also true. What does that say? List price is the price before deducting the trade discount. Yes, that particular answer is true. Right. Next one. Next one. Debit balance according to the bank statement is a favorable balance. Puta, if you take your balances, bank balances, basically according to your cash control account, you find your balance, business balance, and from the bank statement, you will find the bank balance. Puta, according to the cash control account, you may have the debit balance or else you may have the credit balance, and even for the bank statement you will have the debit balance as well as the say what, credit balance. Puta, according to the cash control account, debit balance means which is an asset for you, so then it is a favorable balance. But if the same cash control account is having a credit balance which is an unfavorable balance, which is what balance? An unfavorable balance, right? And according to the bank statement, if they have a debit balance, that means it is an unfavorable balance. You debit, a bank will debit to the bank statement when you do the withdrawal. So then when you do more withdrawals than the deposits, you will have a debit balance, so which is an unfavorable balance. And if the bank statement has a credit balance, then it is a favorable balance. When you are having a debit balance in the cash control account, in the bank statement you find it in the credit side, may be different to each other. And unfavorable balance you represent in the credit side of the cash control account, but it will be represented in the bank statement debit side. Now we will look at the question. Debit balance according to the bank statement is favorable. Debit balance according to the bank statement is an unfavorable balance. Debit balance according to the bank statement is an unfavorable balance. Fourth one, it is false. Debit balance according to the bank statement is an unfavorable balance. Because when you do the withdrawals, when your withdrawals are higher than the deposits only, according to the bank statement you get a debit balance, so then you identified unfavorable OD balance, right? Look at the next question. Discount allowed column will be available in the receipts journal. Exactly. Discount you allowed on whom? Discount you are allowing to whom? On the trade receivable balance. Discount allowed is an expense, right? Expense, and at the same time discount you allowed on the trade receivable balance when you are collecting the cash from the debtor, right? So when you are collecting the cash from the debtor, it will be recorded in which journal? In the receipts journal. So in the same journal you record the discount allowed. In the same journal you record the discount allowed. So then discount allowed column will be recorded available in the receipts journal. Obviously yes, in the receipts journal you get the discount allowed column, and then the value column, and then the analysis column. That statement is true. Number 5, that statement is true. Next one, cash sales are initially recorded in the receipts journal. Exactly, right? As we know, sales are also two types. Sales. What are the two types of sales, Cash sales and the credit sales. Cash sales and the credit sales. Cash sales you record in the receipts journal initially, but the credit sales you record in the sales journal. Credit sales you record in the sales journal. All the cash receipts, irrespective of the way you received, all the cash receipts will be recorded in the receipts journal. It is true, right? Cash sales are initially recorded in the receipts journal. It's true. 6th statement is true. Total of the discount column in the payment journal. In the payment journal, what is the discount column, In the payment journal, what is the discount column? That is the discount received column, right? That means they are talking about the discount received. Discount you received when you pay for the creditor. Discount you receive when you pay for the creditor. So when you pay for the creditor, where you record? In the payment journal. So then the discount received also will be recorded then in the payment journal. Okay, they say total of the discount column in the payment journal should be credited to the discount received account. Yes, discount received. What is a double entry? What is a double entry? Discount you receive from the creditors. So then trade payables debit and discount received account credit. Trade payable debit, discount received account credit. Yes, obviously discount in the payment journal you are crediting to discount column. Transaction number 7, discount received is true. Transaction number 8, petty cash payment voucher will be used as a source document in identify the petty cash payment. Petty cash payment voucher, yes, petty cash payment voucher is a source document. Petty cash payment voucher is a source document in identifying all the petty cash payment, right? All the petty cash payment. You know that when it comes to the petty cash transactions, which is done by the petty cashier, petty cash transactions, which is done by the petty cashier, are mainly two: receipts and the payments. Receipts and the payment. The cash receipts by the petty cashier, it's a payment made by the main cashier, so then that you will identify from the payment voucher, and all the payments, all the petty cash payment are for that only you raise the petty cash vouchers, So cash receipts by the petty cashier, they identify through the payment voucher which is raised by the main cashier. Petty cash payment will be identified by the petty cash voucher that will be raised by the petty cashier, right? Okay, that's all. That is a answer for the question number 1, right? Now we will move into the question number 2. (2022) A levels. You are required to identify the source document. What is the first one? Cash sales. But as you know, cash sales will be recorded in the receipts journal. So then what's the source document then? Cash receipts. What is the source document? That is a cash receipts. Credit sales. Credit sales you identify through the invoice. So then you can also call those as sales invoice. Always the invoice is raised by the seller and the original will be received by the buyer, and the carbon copy will be kept by the seller. So then same invoice, for the seller it's a sales invoice, for the buyer it's a purchase invoice. The main objective of the invoice is to confirm that ownership of the goods has been transferred from seller to buyer, right? Cash purchases. Cash purchases are recorded in the payment journal. So then the source document will be payment voucher. All the cash payments, irrespective of the reason for the payment, every cash payment will be recorded in the payment voucher. So will be recorded in the payment journal. The source document will be the payment voucher. Fourth one, credit purchases. Credit purchases also you identify through the invoice, right? The same copy, right? Then you call that as also you known as purchase invoice. Transaction number 5. Payment of electricity bill. Same thing, payment voucher that will be recorded in the payment journal. Then it will be the payment voucher. Transaction number 6. Discount allowed. Putha, you allow the discount by the time you are collecting the money from the debtor. So when you are collecting the money from the debtor, it will be recorded in the receipts journal. So then if you record anything in the receipts journal, source document will be cash receipts. And now what is the source document for the discount allowed? That's a cash receipts. Discount received, then obviously it's a payment voucher, because you receive the discount when you pay for the creditor. You receive the discount when you pay for the creditor. When you pay for the creditor, where it will be recorded in the payment journal. Transaction number 8. Bank state. Sorry. Transaction number 8. Bank charges. Putha, bank charges, if it is omitted from your books of accounts, that means it has not been recorded in the payment journal. So once you receive the bank statement, if you identified for a specific month, checkbook charges or the bank charges has not been recorded, so then it has to be now recorded in the amended cash control account by passing an entry in the general journal. So then what is the source document for this? That is a journal voucher. That's the journal voucher. We haven't discussed all these journals in the theory class yet, but some of the things may be familiar for you. Even the general journal we haven't discussed much, but keep in mind, if you record any transaction in the general journal, source document has to be the journal voucher. Source document has to be the journal voucher, right? That is all about the question number 2, right? We are moving to the last question. Putha, from that you are supposed to identify, right? You are supposed to identify the journal entries to copy the total of each and every journal to the ledger, right? Okay, what's the first one, Putha? Total of the receipts journal. Total of the receipts journal. How do you record the total of the receipts journal, Putha? Total receipts, cash receipts will be debited to the cash control account and it will be credited to the respective ledger account. Respective ledger accounts credit. Respective ledger accounts credit. Receipts journal. What next? Total of the discount allowed column in the receipts journal. Total of the discount allowed column. Discount allowed column. Discount allowed column in the receipts journal. What's the double entry for the discount allowed, Putha? Discount allowed account debit and trade receivable control account credit. It will be credited to the trade receivable control account. Total of the payment journal. Total of the payment journal. Total of the payment journal. But all the cash payments supposed to be credited to the cash control account. So then you credit cash control account credit and where this need to be debited, respective ledger accounts. All the payments must be debited to the respective ledger accounts. What next? Total of the discount column in the payment journal. Putha, what discount column is available in the payment journal? That is a discount received. Okay. In the payment journal, what discount column you get? Discount received. What is the double entry for the discount received? Discount received reduces creditors. So then the trade payable account will be debited and discount received account will be credited. Discount received account will be credited. What next? Cash receipts by the petty cashier. Putha, when you are receiving the cash, you know that with regard to the petty cash payment journal, there are mainly two transactions, right? With regard to petty cash, there are mainly two transactions, right? One is the petty cash payments and the receipts. So now here they talks about the cash receipts by the petty cashier. Putha, petty cashier receives the money. Petty cashier receives the money from the main cashier. So then petty cash receives. What's the double entry when the petty cashier receives the money, Putha? Cash control account, petty cash control account will be debited and then the cash control account will be credited. It will be credited to the cash control account, right? It's a payment from the main cash book. So then it will be credited to the cash control account and it will be debited to the petty cash control account. Total of the purchases journal. Purchases journal. What is the journal entry? Purchases account, debit, trade payable, control account, credit. Trade payable, control account, credit. What's the journal entry? Purchases account, debit, trade payable, control account, credit. Then total of the sales journal. Total of the sales journal. In the sales journal, you know that you record the credit sales. Total of sales journal. Total of the sales journal. Total of all the credit sales. How you going to record it? Debit, trade receivable, control account, debit, and sales account, credit. TR control account, debit, sales account, credit. Total of the purchases return journal. Putha, purchases return outwards journal. Purchases return. When you do purchase, you are debiting to the purchases account, credit into the trade payable control account. Now when there was a purchases return, it reduces the trade payable. So then trade payable account will be debited and the purchases return account will be credited. Right. The last one, sales return, return inwards. Credit sales, what's the double entry? trade receivable control account debit, sales account credit. Now when there is a sales return, it will be debited to the sales return account. Keep in mind, you are not debiting to the same sales account, you have to create a new account which is called sales return. This will be identified as an income account and credit trade receivable control account, trade receivable control account. From this, both sales profit and the trade receivable balance will be decreased, right? So that is all about this additional paper that which we have given on the prime mentor books, right? Please check whether your answers are correct watching this video. Thank you.